Good morning, good afternoon, and good evening, depending on what time zone you are at today. Hi, this is Rich Longo, Global Alliance and Head of Marketing for Finacle, located here today in Bangalore, India. With me on the call, I have Maya, our Head of Product Strategy, and Deepak, our Head of Architecture for the Finacle platform. We want to thank you very much for taking out time today to hear about our thoughts with transforming your organization from digital to truly digital. During this time, this will be an interactive session where we hope to gain some of your thoughts where the market's trending, especially your financial institution. In addition, this session will be recorded and slides will be shared via email if you want to share it further within your organization. At any time, feel free to post questions. We'll take periodic breaks and try to answer all the questions given during the session. As we look into financial services, the industry continues to experience unprecedented change based on behavior and experiences that either the emerging wealth generation or your customers that are tech savvy expect. One set of those factors is purely environmental. So for banks, sluggish global macroeconomics growth that shows no signs of picking up, rising regulatory capital and operating costs in a depressed interest rate environment are affecting the way banks engage with customers. This is putting further strain on the banking business, which is already bogged down by a marked slowdown in growth and profitability. The second set of changes that we're seeing can be summarized in one word, namely digitization. The rapid evolution and adoption of digital technology is posing a very real threat of disruption to established banking business, the likes that we haven't seen in a very long time. Customers are continuing to reset their expectations based on their experiences in other businesses, whether that be your interactions with Amazon or PayPal, for example. The new competitors prove more agile than incumbents in fulfilling those demands, but yet the expectations are still there for banks. Regulators, once sworn to protect the banks, are now gradually lowering the barriers and encouraging this innovative and disruptive digital business models with open banking initiatives. Banks are therefore trapped in a delicate situation where they must transform into sustained digital entities while battling serious environmental headwinds. We never thought of, for example, PayPal being enabled with MasterCard or Visa because at one time they were just natural competitors. Or Amazon Alexa integrating with several larger banking platforms. Our viewpoint is clear, that you cannot succeed unless you transform. The parallel agenda only by implementing a bold and comprehensive, truly digital transformation strategy can accomplish the needs of your ever-demanding consumer. The time for playing at the fringes is clearly past. So we want to discuss, sorry, the slide is going a little slow here, guys. We want to talk about one of the 6 strategic trends. Specifically, customer experiences will either make winners or laggards. Creating a customer-centric organization providing intuitive digital experiences are priorities for 3 out of 4 banks. However, results on the ground yet are to match that intent. Banks are creating labs, they're exploring, but they're not actioning. In a recent survey of 700 millennials, overwhelmingly 75% said they were dissatisfied with their digital banking experience. Simplicity is key. Some have called it the Uber experience. Within seconds, you can arrange transportation without not having to input where you are or worry about paying when arriving at your destination. More of the e-commerce services are focused on customer convenience and simplicity. Banks clearly lag with those experiences. Customer experiences will increasingly benefit from investing in technologies. So, for example, one hot word that you're probably hearing nowadays is artificial intelligence, enhancing human-machine interaction with better quality, consistency, and efficiency. We've seen that a little bit with bots, but it extends to a real-life example like Capital One, and Capital One, how they deployed Alexa, which is Amazon's e-commerce artificial intelligence machine. The customer experience of the future will be highly contextual thanks to analytics, involving interaction with human machines rather than people, and Alexa proves that point. This pace of evolution will be too fast for many banks, which lack the foundation to deploy such technologies. Those banks are at severe risk. To provide unique customer experiences throughout the customer's lifetime, banks must train their design focus on the customer journey. As they interact, whether it's in the e-commerce world or anywhere else with technology, that experience and that bar must equal the experience and that bar that they experience within banks. In 2017, we believe leading banks will try to articulate how the customer journey will evolve in the future, an attempt to add further value to their customers. It's really, truly the time to decide whether you're going to action on your customers' demanding needs today. Now, I want to hand it over to Maya to explain the second strategic trend we're seeing. Maya?
Thanks, Rich. Good morning, good evening, and good afternoon for people who have joined on the call. And it's a privilege to be on this call and sharing our point of views around the strategic trends. The second and the most important strategic trend that we are witnessing is the economics of the business ecosystems. I think this requires some kind of a historical background. If you now look at industrialization, the first industrial revolution really helped many industries, which is including manufacturing, retailing, automotive, and airlines industries. But unfortunately, banking as an industry never got the benefits of true industrialization. Way back in 2013, when we started this trends circulation, for that year we spoke about one of the trends saying that in next 5 years, banking is going to be conducted by a gang of four. The gang consisting of retailers, telecommunication companies, banking organizations, and technology providers. Many of them came back and asked us, are you serious about it? In fact, we said that we are witnessing the trends which are going to make the banking is consisting of gang of four. The retailers are going to service the customers and as well as do the selling of the products to the customers. The banks are good at manufacturing the products and the risk domain, whereas the telecommunication companies are good at managing the infrastructure, hardware, networking, data center, and the volumes of business. And the technology providers are good at providing frameworks and platforms for the banks to innovate and offer the products. To many of the people's surprises, we heard in 2016 that Amazon, who is one of the leading retailer, e-commerce giant, they tied up with Wells Fargo in the US to sell Wells Fargo student lending products. That was one of the predictions that we did. Similarly, if you now look at today in terms of the cloud environment, all the cloud providers across industries, they're all consisting of mainly the telecommunication providers, whether it is AT&T, Verizon, Telstra, BT, Airtel, you name them, they're all coming from the background of telecommunication company. So what we are trying to tell here is, just like what Rich mentioned in his previous example of an experience to customers, the Uberification of a banking environment, the Airbnb of a banking environment is going to be consisting of a proper ecosystem. That ecosystem has to come into play, selling the solution rather than the product to the end customer. So the solution consists of a banking product, an insurance product, and a credit card, and a mutual fund within the financial vertical. And going beyond that, they need to tie up with retailers, telcos, and manufacturers, automobile dealers to make sure that the whole experience of selling a complete solution happens leveraging the ecosystem. Recently, there was a research report that was published which talked about globally there are 12 key global original equipment manufacturers belonging to automobile industry. They have around 223 platforms producing around 17 million cars today. What is predicted in 2020, these platforms are going to get condensed into not more than 10, and they're going to produce 33 million cars. So as we see, the consolidation and the ecosystem development and the standardization is happening from an industrialization perspective much rapidly in other industries, and banking industry is not far behind that, and they need to leverage the industrialization and the ecosystem much before than any other player does it. In our prediction, what we are trying to say that a collaborative ecosystem is going to be the next definition of a universal banking model, and this is being leveraged by an effective digital platform that provides capability for the banks to bring in different parties to the entire ecosystem and leverage their strengths and in a collaborative way. And we see that 2017 is going to be a lot more sharper focus from the bank side to bring in and participate the ecosystem in a much profitable way. So this is what we wanted to talk about from the perspective of trend on the ecosystem. With this, what we are trying to do is ask you to enter into a survey, a small survey, which we have put up on the screens now. Basically, we are asking a question to the audience. Can you please indicate which are the below elements that can constitute a proper definition of an ecosystem in your strategy definition? Is it going to be participating in a local ecosystem or a regional ecosystem, or it is going to be participating in a global ecosystem like bringing in the Google, the Amazon, and the Facebook kind of companies, or is it going to be creating a bank-led, either your bank or a regional leader bank in your region trying to create an ecosystem, or you're still evaluating whether ecosystem is the strategy going forward? I request you people to take the poll, and you can select multiple options. It's not necessarily you have to select only one of them. While people are selecting that, we'll just wait for the results to come up on the board. We'll give another 10 seconds for people to poll in. The question is whether you want to participate in local ecosystem, whether you want to participate in the global ecosystem led by companies like Google, Amazon, Facebook, or you want to create a bank-led ecosystem, or you're still evaluating what needs to be done from the ecosystem perspective. Okay, let's now look at the results of it. And interestingly, there is a tie between first two, participate in the local ecosystem, and this is what we also saw in the morning edition of this seminar, and as well as participate in a global ecosystem. But one of the things that stood out in the morning edition was most of the participants are looking at creating a bank-led ecosystem. Interesting perspective and insights. Thank you for it. And I now hand over to Rich for the next trend. Over to you, Rich.
Thank you, Maya. So the next trend we want to look at is moving a step closer towards autonomous banking. So our view is that the fourth industrial revolution, like the ones before it, will actually energize employment by creating new, exciting, higher-order opportunities to compensate for the routine jobs it will take away. So technology driving automation that we're seeing today is smarter workflow, for example, through straight-through processing, leveraging SOA-based integration across multiple and disparate applications. You see this complexity, especially on larger financial institutions with multiple lines of business, making it easier for the interaction and experience for the end user, the customer, and then the back office operations, lowering OpEx. Robotic process automation will automate processes which were written with repetitive human actions, even when the supporting applications were not fully integrated. Applications have taken a big leap forward in the realm of self-learning systems, which learn automatically as processes are executed and business rules are tweaked. One of them that we've seen is a top 10 bank in the United States using the elements of machine learning to provide a unique customer user experience. The system learns every time the customer signs in. So eventually, their landing page after they sign in provides the widgets and experiences that are most important for that individual customer. And the customer is not changing anything. In the future, blockchain will take inter-organization automation forward as it redefines and automates traditional business processes and transactions. We truly believe that in 2017, we'll see more banks driving processes to intelligence machines. In fact, just in the past 3 weeks, we've heard from 5 different financial institutions where they're going to take elements of that and implement it both on P2P and B2P, person-to-person payments and business-to-business payments, to avoid, for example, the alternative rail transactions, whether it's ACH or SWIFT, so they don't have to pay the transactions, and keep more of the non-interest income. So now I want to hand over the next section to Maya. Maya?
Thanks, Rich. The next section is, I think, the most talked about topic and as well as most controversial topic when it comes to in terms of a truly digital environment. As banks move from a digital to truly digital, there is a risk of many of the banks losing data. There will be a cyber security threats coming into picture. And we also seen a lot of data and the confidential information being lost to the intruders. The last week's paper report about Lloyd's TSB online accounts being troubled by a denial of service is one such example that is going to increase as banks move towards truly digital. In this direction, the foundation of a security is not going to change. Fundamentally, it is going to be consisting on broad 3 pillars: what you are, what you have, and what you know. What you are is basically your physical attributes, the biometrics, the retina, the facial recognition, voice-based authentication. What you have is in terms of the cards or the smart cards, the credit cards, the PIN pads, and what you know is the passwords for those PINs or for the cards that you hold. As we see in 2017, the risk of security increasing, we foresee that banks are going to invest more and more money in the concept of what you are. So either internally inside the organization or externally for securing the consumer data and providing a safe banking transaction, the banks are going to depend on the physical attributes, the biometrics, the voice-based banking, then facial recognition and retina-based recognition for conducting more and more transactions. In 2015, there were more than 800 million records of the customers being breached, and that got doubled last year in 2016 to almost 1.6 billion customer records were breached. We feel that the pervasive digitization that is going to take place will have a lot more security incidents going forward. Security is a journey. It is not a destination. No vendor, no bank can claim that they have reached the destination. As the technology evolves, there will be a lot more such security loopholes getting introduced, and banks and the organizations have to keep dealing with the security as and when the technology evolves. We feel that in 2017, the security imperatives will be embedded as part of every design of a code, every design of a product, the delivery of a product, the distribution of a product, and the development of a product. And this has to bring in the element of ease of use. Security at times can be complicated, and it can take away the best user experience. So the challenges before banks in 2017 is going to be marrying between the ease of use the cool experience, and the security element that is to be robust and providing the trust and transparency to the end user. So security should not hinder innovation. This is what our suggestion to banks. And we have seen some of the leading banks taking a step forward in the direction. Banks like ICICI in India and Axis Bank in India, they have gone ahead and introduced voice-to-bank banking. Similarly, Barclays in UK, they have gone ahead and used voice-based authentication mechanisms for the banking transactions, so that slowly they are moving out of the passwords. So 2017 is going to be death of passwords. You don't have to remember any more passwords. The banking transactions will be carried out by biometrics, voice recognition, facial recognition, retina recognition, and based on the fingerprints. So with that, what I'll do is I will hand over to Rich for the next important trend, which is going to be around the insights. Over to you, Rich.
Thanks, Maya. I want to take a moment to ask our audience if they have any questions that they might want to ask before we continue here on any of the trends that we've covered so far. If not, we'll continue. So please write your questions, and we'll continue with the other trends. We haven't seen any questions come through yet. So, for example, the next trend, you must bank on insights every time and everywhere. Our position is today banks are anticipating analytics' third wave. During the first wave, when information resided in a variety of silos, banks' chief data challenges were the integrity and integration. So, for example, at small banks, they might have between 50 to 100 applications, each with their data reporting systems. Or large banks contained over 10,000 applications. Again, it was a nightmare trying to merge that data together and create useful data analytics from it. And the second, the big challenge was to manage big data from different sources. Here, banks were helped by the decrease in storage costs. The third wave is characterized by fast data and the need to gather customer product location and user insights, among others, and act upon it in real time. Heading into 2017, we expect a significant part of analytics investments taking the open source route for better results, whether it be Hadoop or others. We also look forward to analytics being available to all partners and customers included, and not just the bank's top management. There is a growing realization among banks that analytics, besides offering valuable input to human beings, must also feed machines and self-learning software. The goal should be to continually progress from a descriptive and diagnostic state, understanding what happened and why, to a state where we can then predict what will happen and prescribe the next right steps for the individual user or the organization, thereby reducing people and time and operational costs. In 2017, we asked banks to invest in analytics applications that work predictively and prescribe recommendations to organizations and users based on those predictions, wasting useful time. So I want to pause there for a second, and our next section, Empowering Your Employees for the Digital Transformation, I want to hand that over to Maya. Maya?
Thanks, Rich. Before I take up the employee empowerment, I would like the audience to take another poll, please. And basically the question here is, can you indicate the level of maturity within your organization for using data-driven insights? This is associated with what Rich talked about in his previous trend. So the options are you going to now use these insights for descriptive, knowing about what happened, diagnostic, knowing about why it happened, predictive, based on the data that you already have, predicting what will happen going forward, and prescriptive, so what is to be done. So please take your poll. It need not be limited to one option. You can select multiple options. So the question is, what level of maturity that your organization at this point in time when it comes to using the data-driven insights? Is it descriptive, diagnostic, predictive, and prescriptive? As you're answering this poll question, I repeat what Rich asked in the previous trend. Please ask any question that you have. You can type the question in the tab that has been provided on your screen. So we will respond to those questions as soon as possible during the presentation itself. Okay, we will give another 5-6 seconds for people to respond to this poll. What is the level of maturity when it comes to using data-driven insights? Is it descriptive, diagnostic, predictive, or prescriptive? Okay, let me now look at the results. Interestingly, almost 70% are voting for diagnostic, which is basically knowing about why it happened. And the next biggest investments is going in terms of descriptive to understand what happened, and followed by what is to be done from the perspective of a remedial measure. And last comes is the predictive in terms of what will happen going forward based on whatever insights that has been given by this data insights. Interesting insights. Thanks for that. So let me now move to the last strategic trend in this section, which is fundamentally looking at an employee empowerment. Today, if you now look at 50% of the global population is less than 30 years of age. Almost 96% of them are connected one way or the other on the social networking or on the internet or on the mobile. And you have almost 70% of the workforce in next 5 years is going to be replaced by the millennials or the younger generation. So it's utmost important for the banking industry to look at how to engage the employees, because irrespective of the board level strategies, the vision that has been created by the management, they're all going to be only on the paper unless otherwise that gets translated into the last mile connectivity, which is basically at the branch where the customer and the employee meet and over the counter the conversation happens. If employees are not able to effectively pass on the vision and in terms of the whole strategy and that is converted into a product or a service to customer, then obviously whatever strategy that have been decided at a higher level is going to fail. In fact, one of the interesting research report, Gallup, it published some time back, there are going to be two sets of customers who rate the bank's experience from a perspective of customer satisfaction. The one set of customers are called as the emotionally satisfied customers. The other set of customers are not satisfied customers. While inside the emotionally satisfied customers, you will have both rationally satisfied and emotionally satisfied. The challenge before the bank is to convert all those rationally satisfied customers into an emotionally satisfied customer. And the research also shows that once you have an emotionally engaged and emotionally satisfied customer, they are going to increase the share of wallet from the business point of view, and they are going to contribute more than 20% to the profitability of the bank. So what we are trying to tell in this section, employee empowerment, banks have to now not just look at the customer engagement and the customer satisfaction, they also have to look at the users and the employee satisfaction. The challenge in 2017 and going forward in front of the banks is to make sure that converting all those rationally satisfied employees into an emotionally engaged employees. And that requires banks to have empowerment at the right time, with the right information, the right place, at the right cost. So it has to be a combination of training, a continuous learnability, and as well as evaluating what are the additional inputs and awareness and educational aspects that are required to empower the employees. Unless the banks have the empowered employees at the last mile, the conversation between the employee and the customer is not going to be that comfortable. So it is very important to have this empowerment planned, and this planning has to include giving the right culture, changing the DNAs and helping these employees to continuously innovate, and as well as celebrate and fail fast and make sure that you sympathize and empathize with the customer and get back all those customer inputs into a proper product definition and a product innovation. So this also requires for the banks to fill in wherever those gaps are there from an agility and a responsive perspective, to bring in the partner ecosystems in the form of a fintech, so that if you want to combat the talent crunch, you can leverage for the short time, the fintechs can come in and fill in those gaps. So basically it is instilling a culture of zero distance, where the customer and the employee and the staff, they have no distance between them in terms of a free exchange of information and free sharing of the value system, and that based on a continuous learning platform. So with that, what I'll do is I will request the audience to take the next poll, which is basically culminating all the 6 strategic trends, the business trends that we talked about, and we request you to now rate these trends. So basically you have to rank these 6 strategic trends in the order of their importance to the digital transformation of your enterprise or an organization. Do you feel reimagining customer journey is more important, or building business ecosystems and the partner ecosystem is more important, or you feel that autonomous banking is going to be a lot more important in 2017, or security is going to take the leadership position, or you're looking at insights and analytics are important for your organization, or people empowerment or the employee empowerment is more important. So take your time. I request you people to rank these 6 trends from the perspective of which organization you represent and the visibility that you have from the organization perspective. So all of that has a ranking from 1 to 6, and you can rank based on your preference. So in the meantime, if any of the audience had any questions, please raise it in the question area, so we will be able to respond to it. Ranking the 6 strategic trends: reimagining customer journeys, business ecosystems, autonomous banking, adaptive security, banking on insights, or people empowerment. Please consider your organization, what is going on right now in your organization, what you feel is going to be important from a 2017 perspective, from the agenda in front of your bank. I'll give 5 more seconds so that others can also vote during that time. Okay. While people are voting, we have some information in front of us already. So surprisingly, reimagining the customer experience is tied up with the adaptive security as in the first position, then followed by business ecosystem is in the second position, and the third position is banking on insights, followed by the autonomous banking. So I'll just repeat. Reimagining the customer experience is the first priority from the audience poll, followed by we have the business ecosystem, adaptive security, then the people empowerment, and banking on insights. Thank you very much. So what I will do is now we will move on to the next set of trends, which are going to be on the technology part. As you observe, in the last few years, the technology has undergone tremendous change in terms of the rate of change, and as well as the speed of change is never heard of in the human history. While on the one side you have the cost of computing coming down by almost 33% annually, the cost of storage is coming down by almost 30% annually, the cost of networking is coming down almost 27% annually. While this is the cost reduction happening on cost of storage, cost of networking, and cost of computing, the power of the processing is also increasing exponentially. For example, when Intel launched their first chip in 1970, it was having around 4,000 transistors on that chip. In 2016, the latest chip from Intel contained 7.9 billion transistors on their chip. The chip sizes are becoming smaller, the capacity is increasing exponential, the processing power is becoming super, and at the same time, the cost is coming down drastically. While this is one element in terms of the technology evolution, there are many such other things are also happening globally on the technology side. So I have my colleague Deepak also to assist me. So first of all, let me take you to the first trend that we have listed as part of the technology trends. This is basically around the open banking and the open APIs. In the last 6 months that we have spoken to the banks, most of the banks are interested from the technology point of view to evaluate, explore, and adapt the open APIs and the open banking projects in a much faster way. This is also coupled with banks intending to move towards an open source adoption. There are banks like DBS in Southeast Asia, which is now looking at adopting open source in a large scale. They are looking at going on cloud. They are looking at moving into the open source operating systems, the databases, and many other things. It's a significant move for many of the banks in this direction. When we spoke to banks, almost 65% and above, these banks considered that the open APIs will have a transformative impact, and it is going to give them a competitive advantage. And this also links with the second trend in the strategic area that we talked about, how you bring in the ecosystem play. Unless otherwise you are open, you cannot connect and contact with the external third parties, the fintech startup companies, and bring in that leverage to end consumer. Open APIs linked with the app stores, because that is what has been as a standard set by the Apples and the Googles of the world and the Microsoft of the world. So banking is also expected to provide an app store where the consumers can easily go and download the app that they are interested in, use it for a fee, and then delete it. Not just that, it also expecting in the developer ecosystem to come and contribute in creating the idea or converting an idea into an execution mode. We feel that this kind of a situation is win-win for both banks, the partners, and the customers, so that all of them get benefited out of this entire open APIs. While today, in most of the countries, it stands as an optional element, we foresee in 2017 this is going to be a compulsion for banks to expose and participate in open APIs. We are already seeing some trends in that direction. For example, in European Union, there is a financial directive issued called as PSD2, which is the Payment Service Directive 2, which expects banks to open up APIs and provide it for third-party companies to come and leverage that information and offer and create their own innovative products so that the end customer gets the best of the industry and best of the experiences. I think this is going to continue, and we've already seen some early adopters in this direction. Banks like BBVA in Spain, they've already opened up an API portal for the ecosystem to come and leverage those APIs and generate applications. Similarly, in India, we have Ratnakar Bank Limited, or RBL. They have also opened up an app store with an API for the partner ecosystem to consume these APIs and contribute apps, and they have already constructed a financial model and a monetization around this kind of app store. So similarly, microservices being talked about by one of the largest banks in Southeast Asia. So we see going forward, the open banking is going to be a lot more important thing, coupled with BION standards is going to be implemented. With this, I will move on to the second trend, and I now request Deepak Hoshing, who is the Chief Architect of Finacle, to help me in articulating the second trend, which is going to be around the cloud strategy.
Cloud.
Deepak, over to you.
Yeah, thanks, Maya. So let's talk about this whole cloud-first strategy. First of all, the current data centers are being built for the highest possible load that the bank can think of. Typically, what we see is each of the tiers is built up to a capacity of, let's say, 80% usage in a peak load situation that the bank can encounter. So there is a lot of, wastage of resources, and the same thing is replicated in their disaster recovery side as well. So there is already a lot of cost involved in maintaining such data centers. Of course, the issue that most of the banks still have in adoption of cloud has been some sort of a security concern around data and possibly certain regulations which prevent the data from leaving the country. Then there are, of course, sunk investments in legacy hardware and so on. But we believe that things are changing now. Data centers are being set up in multiple geographies by most of the cloud vendors. Even the regulators are becoming more open to relaxing various constraints. We already see multiple greenfield opportunities, direct banks adopting for cloud, either public or private cloud, more often private cloud. And especially new initiatives taken by large players like, for example, mortgage origination. These are all, being preferred to be done on the cloud. Now, what can banks with substantial legacy investments do over here? A, they can take development and testing on the cloud. So they do their development on the cloud, they do testing on the cloud, and then they have a way of moving that development or whatever customizations they have done back into data center and then subsequently deploy it in production. So that's something that banks with such investments can also do. The other thing that banks can do is they can do cloud bursting. So for example, what that means is on that D-Day, for example, your holiday season, festival season, where there is huge amount of transactions that take place, what banks could do is they could divert some of the load into the application server on the cloud, while they may still want to keep the database in the data center. So they can do a cloud bursting, especially for their internet banking or mobile banking kind of applications. So that's something that they can do. And then we are seeing a trend where all the new applications which are being built are all expected to be cloud native. So what does that mean? That means that first and foremost, these applications banks talk about continuous delivery. You want some feature to be added, even if it is small, every day, every 2 days, and so on. Gone are those days where such applications can take 6 months or a 12 months release cycle and so on and so forth. Then the other thing that we see is this whole idea about microservices, which means that you take a bunch of services which are independently installable, independently upgradable, independently scalable, independently maintainable. You take all of these services, form a bunch, and consider that as your microservice component. And then deploying these on containers is what we see banks doing. And especially this is what we are talking about, the newer applications. Now your ultimate goal or a dream is when you have a flood of requests which arrive at your doorstep, you have containers ready to process those requests. So this is what we see as our observation in this cloud first strategy. I'll hand over to Maya for the next one.
Oh, thanks, Deepak. I think right now we have a time for the first poll in the technology trends. Basically, the poll is around, from your organization's perspective, can you please indicate the maturity of your organization's journey from a perspective of migrating your applications to cloud? And you can select all of them or one of them. The options are you're just now deciding and finalizing on the cloud strategy, or you've already gone ahead and started using extensively on the private cloud environment, or you've already put some of your non-critical applications on public cloud, or you're already using hybrid cloud models in your organization, or you're looking at applying a cloud-first strategy for any new application that you're going to develop. I just repeat, can you please indicate maturity of your organization which you represent from the cloud strategy perspective? Is it going to be a extensive usage of private cloud, putting non-critical applications on public cloud, usage of hybrid cloud, or you're still finalizing your cloud strategy, or you're already applying the cloud-first strategy for your new applications? While people are taking some time to answer, we have a question from the audience. Odole is asked, could I please get a quick recap on the first two strategic trends? Obviously, Odole, I'm sorry if you're not able to hear it or you joined in later. The first two strategic trends that we presented was around a seamless, a frictionless customer experience, and the second one was an ecosystem play. Let me briefly explain that. The seamless customer experience is what we feel is going to differentiate banks, a performing bank and a non-performing bank. So this includes bringing in right insights about the customer, using that at the right time about the customer, bringing in the right product at the right time, and this requires making sure that the experiences of an Uber, experiences of an Airbnb, experiences of an Alibaba or a WhatsApp, and the ecosystem play being built in a seamless way, combined that with an ease of use security mechanism, and thereby you enhance the customer experience is what we predicted the banks are going to invest in 2017. That is the first trend, strategic trend, which is around customer experience. The second trend was around the ecosystem. So banking as an industry has not got benefit of industrialization so far, while other industries have gotten the benefit of it. So it's very important for banks in 2017 to look at effectively using the ecosystem, going beyond their operations, bringing the partners, the fintech, and collaboratively working with them to make sure that the customer becomes the solution, not just the product. That was the second trend that we had. So hopefully we have addressed your question. So let us now go to the results of the poll. Oh, very good, very useful insight. So almost half of the banks who were polled in here, they are talking about finalizing the cloud strategy, and rest, there's a tie between banks which are looking at putting non-critical applications on public cloud. Some banks are using hybrid clouds, and some banks are using cloud-first strategy. And very less people are looking at using an extensive usage of a private cloud. Very good insights. So we are also parallelly publishing some of these results on our Twitter handle. So if you want to see at that, please have a look at that in the Twitter. So let's now move to the third important technology trend. This is around the blockchain. I think we don't have to really educate the audience around the blockchain. This is the most disruptive technology after the internet. And in last 1 year, our institution has interacted with many banks, and all of them are very much interested in either doing a POC in blockchain, or they're trying to evaluate what blockchain is. And there are no seminars, no conferences, no technology discussions, roundtable events, or board meetings, or the IT meetings happen without a reference to blockchain. And that has been the trend in the last 1 year that we have witnessed when it comes to blockchain. Not just that, in terms of the adoption of the blockchain from the production environment is increasing. And if you now look at the NASDAQ, which has already moved its settlement environment to a blockchain, now they are looking at moving the entire voting, the members and the shareholders voting, into an e-voting format on the blockchain. Similarly, last week, the People's Bank of China, which is the central bank of China, they have gone ahead and announced they are going to launch a digital currency based on the blockchain. So that is an important trend when it comes to in terms of almost 30 governmental organizations or central banks or agencies have gone ahead and announced and started their committees to look into usage of blockchain in their environment, including UAE, which has taken a very optimistic target. By 2020, all their governmental documentation is going to be on blockchain. And similarly, in Harvard Business Review, last week, they wrote an article saying that blockchain is no more disruptive, it's foundational in nature. I think that itself is very important from the perspective as an observation. So what we are witnessing in 2017 from a blockchain perspective is, while most of the banks are in the stages of completing their pilots and the POCs, I think there will be a race to production in many banks when it comes to adaptation of the blockchain. And we have seen, based on our research, that almost more than 60% of the banks perceive blockchain will have a transformative impact and a competitive advantageous position in next few years. And again, World Economic Forum, last December, they published that by 2027, almost 10% of the global GDP, which is going to be around $8 trillion, is going to be processed or stored in blockchain and digital cryptocurrencies-based environment. Again, they also mentioned that in 2017, there will be almost 70% of the global large banks would have invested in blockchain, and the investment is expected to be around $1 billion plus. So we have seen tractions from the regulators' point of view, and as well as we see that going forward, both regulators and the commercial deployment in a production environment by banks of the blockchain is going to be crystallizing in 2017. So with that, what I'll request is in another short poll from the perspective of what will be the from a blockchain perspective, the priorities for your banks or your organizations when it comes to deploying the blockchain in the production environment. Is your bank looking at deploying blockchain for international remittances? Is your bank deploying blockchain for identity services like Know Your Customer? Is your bank looking at deploying blockchain to carry out the trade finance transactions? Or is going to be used for digital identity, smart contracts, collateral management, or is going to be used for loan syndication? And this has 1 to 7 as a rating. So I request you people to take the poll, and from your bank's perspective, please go ahead and rate it so that we will have your view in terms of what is your perspective and organization's expectations in 2017 when it comes to deploying blockchain in a production environment. In the meantime, if there are any other questions around the previous trends, either strategic in nature or technology trends that we covered, if you have any questions, please post it on the widget. We can see those questions and we'll be happy to respond to that, and we'll be able to provide a recording of that as well. So the question here is in front of you: what are all the areas that your bank will prioritize when it comes to deploying blockchain in a production environment? Is it for international remittances? Is it going to be in Know Your Customers area? Is it going to be trade finance? Or is it going to be digital identity management, smart contracts, collateral management, or loan syndication? I will have 5 more seconds for the audience to select out of these 7 and rate them from 1 to 7 in terms of their priority. Okay, so let's now look at the results. We have the top recommendations from the perspective of a production environment of blockchain is in the Know Your Customers area. So more and more banks looks like they want to have an identity services put on blockchain. The second most important element is the digital identity management. I think this is also combined with the Know Your Customers. The third one is in terms of international remittances. The fourth one is smart contracts. The fifth one is going to be trade finance. And the sixth one is collateral management. And the seventh one is loan syndication. Just repeat. The first one is Know Your Customers. The second one is digital identity. The third one is international remittances. Fourth one, smart contracts. And fifth one is trade finance. And sixth one is collateral. And seventh one is loan syndication. Thank you. So what we'll do is we will move to the next trend, which is going to be around the artificial intelligence, which is again a most talked about technology in 2016. I'll request my colleague Deepak to take this trend through. Over to you, Deepak.
Yeah, thanks, Maya. So talking about artificial intelligence, our own survey says that 86% of bank executives today feel that usage of artificial intelligence will give them a competitive advantage. Let's talk about 2 broad areas where we see this getting applied. First area is the front end. We did hear about insights and analytics when we talked about business trends. To quickly summarize that, a lot of banks have humongous amount of data. Many of the banks indeed have 10-year or even 20-year information about the customers that they have acquired. every single transaction that the customer did over this large period is available with you. Multiple relationships of the customer are available with you. Given all this, there are several cases where bank can look at a differentiated customer experience and talk about what you can call as a segment of one. So let's talk about a couple of examples. If you encounter that someone has paid a check to the builder, you could easily know who is a builder based on a lot of information that you already have. If you come across that kind of a situation, there is a good possibility that that customer is going to offer a housing loan. Similarly, if various transactions that a customer does indicate that he or she is likely to take an upcoming travel, maybe it's a good idea to recommend travel insurance to that customer. That's about front end. Even on the back end side, there is tremendous scope for using artificial intelligence. First of all, we talk about a little bit about robotic process automation. Not all applications have web services. Not all applications have APIs. Many of the applications, the only lever is to automate them through some sort of a UI automation. So which means that you leverage the user interface of the application, and if you say that if a particular kind of a process is to be implemented, go there into that application, click this, click that, all kinds of things, and you can automate that entire process as if there was a human being doing all of those things. So those are kind of workflows that you can automate using robotic process automation. The second machine learning is more like studying load patterns. For example, in a bank, there is a certain transaction mix that gets exercised. So within an hour, you have so many kinds of payments, so many funds transfers, so many cash withdrawals, whatever those transactions are. So there is a certain load mix that is executed in the bank. Can you check how is that load pattern changing? What is that load changing? And based on this load change, can we predict what can be done better as in terms of planning for this bank? This is a classic example of how you can leverage machine learning. And then the third one, of course, which was talked about in earlier section, which is automation through voice-based banking. So basically, these multiple kinds of automations, back-end process automation and the whole front-end renewal, this whole thing can be done leveraging artificial intelligence. So Maya will talk about the next one. Over to you, Maya.
Thank you, Deepak. And I'll move on to the next trend, which is going to be on more things are going to be delivered on bank transactions on devices. So there are more than 7 billion mobile phones globally. Half of them are smartphones. And we are seeing the shipments of the mobile phones increasing year after year. Similarly, there is almost 2 billion tablets and almost more than 2 billion people on the internet. So there is a need for banks to look at how to innovate the products and services delivery onto many of these devices. These devices are not just limited to the smartphones or the devices like a tablet or a PC. Now there is a whole gamut of wearables coming into picture. There are smartwatches and smart wearables and the gamification capabilities, the Internet of Things, all of them coming together, and this brings in that additional pressure on banks to deliver all these transactions on those devices. So you have a lot more devices where the bank has to be delivering these activities, and this requires bank side in 2017 onwards to look at a comprehensive omni-channel platform that not just provides a one single unified platform across devices, across channels, and unified experience to the end consumer, but at the same time, it also provides a channel hopping capability. That means the channels will remember and they will have a memory of what a customer has done, where he has stopped, and so that he can pick it up in another channel seamlessly without expecting him to redo or re-enter all of those things again. So this is where companies like an Uber or a WhatsApp or an Amazon kind of an experience really expected in banking environment, and we see banks are going to leverage this kind of gamification, wearables, IoT, and many other devices that are going to be introduced going forward, and that becomes a device where a lot of transactions will be delivered. So with that, I will request Deepak to handle the last trend, the sixth trend in the technology, which is going to be around banking architecture. Over to you, Deepak.
Thanks, Maya. So let's talk about banking architecture and what is the current situation. First of all, our information is about 79% of the banks believe that their biggest barrier is their existing systems itself. Many systems are a couple of decades old. They are meshed very tightly with each other. They have overlapping functionalities, and there is depleting skills within the organization to maintain such systems. And that's a big impediment to whatever they want to do further. Now, what can banks do about it? First and foremost, there is no simple answer. They could change modules or deploy smaller components in a progressive manner. The other thing that we believe they could do, and we see some of them doing it, is to separate certain capabilities from multiple legacy applications that they have and then deploy those capabilities at an enterprise level. So let's take a couple of examples. Most systems in the bank seem to have some sort of customer data maintenance. So most of the applications have some small amount of customer data that they maintain, even if that is not at an enterprise level. Why couldn't all of this be taken out of these systems and deployed at an enterprise level? Of course, it would mean integration with that enterprise component, but that would simplify some of the systems. Similarly, there are limits maintained in multiple existing systems. So clearing system maintains limits, trade finance system maintains limits, for example, your letter of credit limit, your bank guarantee limits, and so on. So multiple systems again maintain limits. Why couldn't limits be all elevated at enterprise level? So once it is elevated at enterprise level, those functionalities could be disabled from the existing systems. So this way, you could replace partly some of the existing systems. Some of the systems you could simplify by taking out some functionalities, moving it at enterprise level, and so on and so forth. So gradually, this complexity of the backend systems can be reduced. Back to you, Maya.
Thanks, Deepak. So we have completed the six technology trends, and I have a small poll before you. So my request is, can you please rank these six technology trends in order of the relevance from a digital transformation perspective for your organization? Whether you prefer open banking first or cloud first as a strategy, blockchain is an important element in 2017 for you, or is it going to be artificial intelligence investments, or you're looking at architectural simplification, or it's going to be the banking on devices, wearables, gamification, and things like that. So please go ahead and rate and rank them so that we can have a view about it. And in the meantime, there's a question from Ajamal who's asking about how can the bank mitigate cybersecurity risk in the emerging digital ecosystem. Very important question. In fact, we briefly covered that as part of our strategic trends. As more and more things move from digital to truly digital, we feel that the security threats are also going to increase substantially. And we also mentioned that security is not a destination that a vendor or a bank can claim that they have reached. It is always going to be a journey, and as and when the technology evolves, there will be a lot more such security trends emerging, and banks have to effectively conquer it. In this direction, fundamentally, we have seen that the three principles which the security stands on, what you are, what you have, and what you know, that is not going to change. But in terms of the order of priority, going forward, banks are going to depend more on what you are, because that is going to be a unique identifier, and that is going to be based on the biometrics, the physical attributes, the retina scanning, the facial recognition, and voice-based banking. So this is what is going to be increasing in 2017, is what we mentioned in our brief just a few minutes back, and that is what is going to be the trend that we witness, where more and more things are going to become physical attributes based, and passwords are going to be a passe, and it's going to be a death of passwords in 2017 onwards. Good. We have received the poll results, and we are seeing a secular trend in terms of almost three technology trends are competing for the first place, which is open banking, the cloud-first strategy, and the blockchain. All of them are sharing almost the first position. Next comes the architectural simplification. As I speak, I think there are few more people who are voting. Now the voting thing has changed. Architectural simplicity is standing in the first place. The open banking, cloud-first strategy, blockchain is in the second place, then followed by artificial intelligence, and the last one is things to bank on. So I think interesting insights. We really enjoyed having you all on this call. So this call was organized by Infosys Finacle, powered by Edgeverve Systems. So if you have any questions or any further clarifications, please don't hesitate sharing that question or clarification to the email ID that we have provided, and we'll be happy to share that with you. Plus, there will be the Twitter handle @Finacle, which also gives you the trends and the question that we polled and the answer that we got, and you can have a look at it for yourself. Plus, we are going to record this entire session. Along with the document, we are going to share that with you folks so that you can use it in your environment, in your banks, and share that with your leaders and as well as your team members. So it was very great having all of you on this call. Thank you very much for the opportunity, and we look forward for your queries and the continuous patronage, and we'll also look forward for any opportunity to work with you. Thank you very much, and good night, and have a good day wherever the time zone is. Thank you.
Thank you.